Hello students, in today's class we will solve comprehensive problems. In our previous classes we have studied about accounting for not-for-profit organizations chapter various aspects such as its meaning, features, then its financial statements, the meaning, features, formats, then how to deal with some specific items related to these organizations, then how to prepare receipts and payments account, how to prepare income and expenditure account, then what are the various items to be shown in the balance sheet of these organizations, and we have learned how to calculate amount to be shown in these financial statements of some specific items such as subscription, then fund-based accounting, then cost of consumable goods. By using all those what we have learned in our previous classes, in our previous videos, we will be using them here in this class to solve the comprehensive problem where we will get a receipts and payments account along with some additional information, and we will be asked to prepare income and expenditure account and balance sheet. So let's see through a question. So the first question of today's class we are going to solve is on your screen. I am reading it for you. From the given receipts and payments account and additional information of Premier Club for the year ended 31st March 2019, prepare income and expenditure account for the year ended 31st March 2019 and balance sheet as on that date. The receipts and payments account for the year ended 31st March 2019, to balance brought down. This is our opening cash balance 80,900. It is not taken to the income and expenditure account. It is our previous year's closing cash balance. Two donations 39,000. Donation is general donation here, as nothing specific is given along with it. So it will go to the income and expenditure account. Two subscriptions, total subscription received 91,000, which belongs to 2017-18 12,000 rupees. For 18-19 received it's 70,000 rupees, and for 2019-20 in advance we have received 9,000 rupees. Two interest received 19,700. Then on the payment side, buy furniture and equipment of 1 lakh rupees, and this was purchased on 1st of October 2018. Then buy salaries 62,000. Salary is our revenue expenditure, will go to the income and expenditure account. And buy balance carried down, that is the closing cash balance, which goes to the closing balance sheet asset side 68,600. Some additional information also given. On 1st April 2018, the club had the following balance of assets and liabilities. Furniture and equipment 1,80,000 rupees. Subscriptions in arrears 15,000 rupees. And outstanding salary 13,000 rupees. Second point, charge depreciation on furniture and equipment at 10% per annum. Here you see sports and this furniture and equipment purchased this year on 1st of October, and they have some opening balance also. So accordingly we will calculate depreciation on both the amounts. The club had 90 members, each paying an annual subscription of 1,000 rupees. So here when number of members are given along with the annual subscription amount, so we simply take the multiplication of both these to the income and expenditure account credit side to show our income from subscription for the current year. So let's solve it. So to solve this question, just we have read, and it was on your screen also, we require income and expenditure account, balance sheet at the end of the year, and opening balance sheet. Why do we require opening balance sheet? Because in the question, capital fund is not given. When it is not given, then we prepare opening balance sheet in working notes. Right? Now, how to solve? In our previous class, we have learned to prepare income and expenditure account when a receipts and payment account is given. We take each and every item. We read each and every item from the receipts and payments account. Then we transfer that to either income and expenditure account or the closing balance sheet or the opening balance sheet. And along with every item, we will see if any adjustment for that is given. If adjustment is given, then we will make the adjustment accordingly. So one by one, each and every item we will see. One thing you have to keep in your mind, that first check if capital fund at the beginning of the year is given in the question or not. If it is not given, we need to calculate it because it has to be shown in the closing balance sheet. And how to calculate? By preparing opening balance sheet. Opening balance sheet is nothing special. It is simply the balance sheet of previous year. Like we are making it for this year, it is for previous year. So only previous year's item will be taken here, and some of those items which are taken here will be transferred in the closing balance sheet also. So one by one, every item we will see, and we will learn how to transfer them into these three statements and how to calculate amounts of some items if adjustments are given for them. So look here. In the receipts and payments account, the first item given is to balance brought down. So it is our opening cash balance. That means it was the cash balance at the end of the previous year. We write it as cash in hand in the opening balance sheet. And it is 80,900. 80,900. Then second is two donations. As I told by reading, it is a general donation. So we take in the income and expenditure account, income side. Two donations. 39,000 we have received. Then two subscriptions. Subscription is given to us. Total 91,000 we received in this year. Out of which 12,000 relates to previous year, 70,000 for the current year, and 9,000 relates to the next year. When in the question, in the adjustment, it is given that the club or the NPO has these many members. Every member pays annual subscription of some amount, then simply to calculate here, we take the multiplication of that information. So we write here by subscriptions. And here 90 members, every member has to pay 1,000 rupees. It means for the current year, total 90,000 is the subscription income. But out of it only 70,000 has been received. It means the remaining amount is outstanding. But we have to calculate how much is outstanding for the current year. Along with it, some other informations are given. 17-18 we have received 12,000. Now we will read relating to it the information is given. In the first point, the amount of subscriptions in arrears at the beginning of the year is given. That is our opening outstanding subscription. So we write on the asset side, subscriptions outstanding at the beginning of the year 15,000. Out of which how much is received? 12,000 is received. It means 3,000 previous year is still outstanding. Current year how much we require? 90,000. And of current year how much has been received? 70,000. So 90,000, out of 90,000 we received 70,000 for the current year. It means 20,000 is outstanding of current year. 3,000 is outstanding of previous year. So total outstanding at the end of current year is 23,000. So this outstanding subscription in the previous year's balance sheet 15,000, in current year's balance sheet we will show it as 23,000. And for that we will show a working note. Number 2, outstanding subscription. As on 31st March 2019. So subscription required in 2018-19, the current year, we require 90,000 rupees. This is clear to us from here. Minus out of which how much received? Subscription received for 2018-19. That is given in the question 70,000. It means 20,000 is outstanding subscription for 2018-19. Now plus in it still outstanding subscription of 17-18. How to calculate? How much was outstanding 17-18? 15,000. How much of 17-18 received? 15,000 minus 12,000 received. It is given in the receipts and payments account. 12,000 received for 17-18. So how much is outstanding? Still outstanding of the previous year? 3,000. So total 23,000 is subscription outstanding subscription as on 31st March 2009. Now this we will take here, outstanding subscription $23,000. Now advance subscription for next year received. Advance subscriptions next year 9,000 we have received this year for next year. This is the old subscription. All the informations we have taken. The next item, 2 interest received. It is also an income. So by interest received. And amount is 19,700. Receipt side over. Now come to the payment side. It's written by furniture and equipment. Now we'll see what is additional information for it. So first point says on 1st April 2018, furniture and equipment had a balance of 1,80,000. So it is previous year. We write here furniture and equipment. Last year we had balance of 1,80,000. Now we'll take it here also because it is our asset. So it's continuing with us. No part of it has been sold. So 180,000 from previous year plus new purchase. That's given in the receipts and payments account 1 lakh rupees. But we purchased it on 1st October and minus depreciation. 10% depreciation is to be calculated. Second point says so. So depreciation also to be calculated. How to calculate? Let me make the working note third here. Working note number 3. Depreciation on furniture and equipment. See, we have already 1,80,000 from the previous year. 10% is to be charged into 10%. Plus newly purchased 1 lakh into 10% of it for 6 months. So the amount is 18,000 plus 10% of 1 lakh 10,000 for 6 months 5,000. So total 23,000 is the amount of depreciation. So that we subtract from here 23,000 and final amount is 257,000. And this 23,000 will be taken on the debit side to depreciation. On furniture and equipment, 23,000. The next item is salaries. So we write here 2 salaries. And an adjustment is also given here. Salaries adjustment is on 1st of April 2018. Outstanding salary was 13,000. It means last year 13,000 were not paid. We have paid it this year. So 62,000 minus outstanding at the beginning. 13,000 and this 13,000 will be shown in the opening balance sheet also. So 62 minus 752 minus 340, 9,000 here, and here we write as outstanding salary. How much? 13,000, last year's figure. Then by balance carried out, it is our cash balance. So we write it here, cash in hand. It is 68,600. All the items we have taken. Now we will check whether all the adjustments have been done or not. So first, on 1st April 2018, the club had furniture and equipment. We have taken 180. Subscriptions in arrears 15,000 we have taken, and outstanding salary 13,000 we have taken. Now we have made the adjustment of them. Here, yes, outstanding subscription of previous year taken here. Outstanding salary has been subtracted here. Depreciation charged here as well as posted here. And the club had 90 members, so that we have shown. It means all the items have been done. So we will calculate now the first opening capital fund. Take the total 900 5, 275 900, minus 13,000, so it will be capital fund. Balancing figure. 275 minus 13, 260, 2900. This we will take here, capital fund. Opening balance 262 900 and plus minus surplus. So let us calculate the surplus amount. We take the total of all the sides. The side which shows larger total here 39, 90, 129, 129, 139, 148, 700 this side, and here it is lesser. So we take the total of this side. $148,700 minus the total of these two, 49 plus 20, 69, 72,000 we subtract. 148 minus 72. So 76,700 is our surplus. So we write 2 surplus, that is excess of income over expenditure. Income over expenditure 76,700. Now this 76,700 will be added to surplus plus surplus 76,700. 9 7 16 6 3 9 6 7 13 3 39 600. Let us take the total. 600 9 and 18 4 348 600. Here 600 8 7 15 3 18 3 5 8 6 14 and 2 1 3 348 600. So this way it is solved. What is to be kept in mind? That each and every item from the receipts and payment account is to be read along with its adjustment, and accordingly it is to be dealt with. What is to be considered? Their nature, revenue or capital. All revenue items goes to the income and expenditure account, and all capital items goes to the balance sheets. Opening balance sheet we take previous year's items only. From receipts and payments account, previous year's items can be given 2 items. One is the opening balance, and the second, the amount outstanding last year for subscription. Then those items then we will take here in opening balance sheet. Then remaining items with their nature we transfer to these 2 accounts. Have a glance of it. So we will solve one more question based on such type of information. So the second question is, from the following receipts and payments account for the year ended 31st December 2019 and additional information given, prepare the income and expenditure account of a sports club for the year ended 31st December 2019 and the balance sheet as on that date. The receipts and payment account is 2 balance brought down, cash and bank. Both balances are given here at the beginning of the year. If capital fund is not given, then we will use them in the opening balance sheet. So 890 is the cash balance, 7,000 is the bank balance. 2 subscriptions, 22,200. 2 life membership fee, 32,200. It is a capital receipt. We will take to the balance sheet. 2 tournament fund, 20,000 rupees. We will see through the adjustments if this tournament fund is created as a fund or simply we have received donation this year only. 2 lockers rent, 1,500. 2 sale of old sports material, 2,500, costing 2,200 rupees. So old sports material of 2,200 has been sold here for 2,500 rupees. It means there was a profit on sale 300 rupees. So 300 only we will take in the income and expenditure account, and this 2200 will appear in the opening balance sheet. To interest on fixed deposits 500, to legacy 37,500. Legacy is our capital receipt. To entrance fee 9,000 rupees. It is our revenue receipt. Will go to the income and expenditure account. Then on the payment side, by salaries 16,500, by billiards table, it is our asset. By office expenses 4,100, by stationery 2,300, by tournament expenses. So against the tournament fund, we have tournament expenses of 20,500. It means there is a shortage of 500 rupees. This shortage will be covered up from income and expenditure account. So we will take 500 rupees to income and expenditure account, provided no other information is given in the opening balance sheet, or the previous year's informations are not there with us regarding it. By furniture purchased 7,700, it is also our asset. By sports equipment purchased, this is also asset, 12,000 rupees. By fixed deposit on 1st October 2019 at 10% per annum it was made, 30,000 rupees. That means it is here for 3 months. 30,000 rupees were invested in it. So 3 months interest we will calculate, and we will check with the amount of interest received whether total amount has been received or some amount is accrued. Then by balance carried down. At the end of the year, cash is 690 and bank is 22,000 rupees. So this way, this receipts and payments account is given. Then additional information. Subscriptions outstanding on 1st January 2019 were 1,500 rupees. This we will subtract from the amount received, 22,200 we will subtract from. Then on 31st December 2019 were 2,000 rupees. This is outstanding at the end of the year. We will add it. On 1st January 2019, the club had building 40,000 rupees, furniture 15,000 rupees, and sports equipment 16,000 rupees. These are the amounts to appear in the opening balance sheet, and then from there we will carry to the closing balance sheet also. Depreciation on these items is to be charged at 10%, including purchases during the year. 10% flat rate. Flat rate is given. So without considering number of months, we will take depreciation at the rate of 10% on total furniture. New purchase of furniture as well as of sports equipment. So on both these items, we will take at flat rate. So let's see how to solve it. In this question, we have to prepare income and expenditure account, closing balance sheet, and as opening capital fund is not given, so the opening balance sheet. Item wise, in the same way what we did in the previous question, we will go and we have to keep in mind the adjustments regarding what item the adjustment is given. So that adjustment also we will make. So look here. First item given, 2 balance brought down. So we write it here, cash in hand. In the opening balance sheet we take the opening balance is cash in hand 890 and cash at bank 7,000. The next item is 2 subscriptions. So here we write buy subscriptions. And for that we are given 22,200. Received amount is 22,200. For that we have an adjustment. Subscription outstanding on 1st January 2019. That means outstanding at the beginning of the year. We subtract it, and on 31st December 2019, that means outstanding subscription at the beginning as well as at the end, both are given. So we add outstanding at the end and we subtract outstanding at the beginning. So the outstanding at the end is 2,000 and outstanding at the beginning we have to subtract 1,500. So the total amount of this is 22 plus 2, 24,200 and minus 1,500, then it is 22,700. 22,700. It is our total subscription for this current year. Now these two informations we will take. Outstanding subscriptions at the end we take in the current year's balance sheet. Outstanding subscriptions 2,000 current year's balance sheet at the end of the year, and of previous year we take in the previous year's balance sheet. 1,500. Next item is life membership fee. So it is our liability capital receipt. So we take here life membership fee. No adjustment is given for it, and it is 32,200. The next item is tournament fund. Nothing is given in the adjustments regarding it. And tournament expenses we have seen they are more than this tournament fund. So we write on the debit side 2 tournament expenses. It means it was collected this year only. 20,500 is the expense amount minus covered up from the donations received for tournament fund 20,000 and remaining 500 debited to income and expenditure account. Then 2 locus rent and no information is given for it. So we write it here by locus rent. And locus rent is 1,500. Nothing is given regarding it in the adjustments. Then to sale of old sports material. Costing 2,200 we have sold and we have sold it for 2,500. So there's a profit. So we write here by profit on sale of sports material. 300 is the profit and this 2,200 we write here sports material in the opening balance sheet. Previous year's stock of 2,200 is sold this year. Then do interest on fixed deposit. So we write here by interest on fixed deposit. It is 500. No, we will calculate if any amount is accrued. Fixed deposit were purchased on 1st of October 2019 at 10% per annum. 30,000 rupees. How many months? From 1st October to 31st December, 3 months. October, November, December. 3 months, 10%. So here, accrued interest let us calculate. Accrued interest on fixed deposit. Interest receivable. You are due to receive. How to calculate? Total amount of fixed deposit is 30,000 into 10% into 3 months. So 10% is how much? 3,000. And for 3 months it will be 750 minus received. How much is received? 500 is received. So 250 is accrued interest. So we take it here 500 plus accrued 250, total amount 750. This is our working note number 2. This 250 we will take here. We take fixed deposit, $30,000 and accrued interest on fixed deposit. Accrued interest on fixed deposit 250. Okay. Then to legacy. Legacy is our capital asset. So we write here legacy on the liability side of the balance sheet. 37,500. Then entrance fee, here we take by entrance fee. And this is 9,000. No adjustment is given for it. Then from the payment side, by salaries, 2 salary we write here. And let us see if any adjustment is given for it. No adjustment is given. So 16,500. Then by billiards table, this billiards table is our asset and nothing is given as an adjustment against it. So billiards table we write here. Billiards table 17,500. Then office expenses and nothing is in adjustments given for it. So 2 office expenses. We write it 4,100. Then 2 stationery we write. And nothing is given in the adjustment for it. 2 stationery, 2,300. Then tournament expenses we have taken. Furniture purchase. Furniture purchase we have to take in the balance sheet. So we write here furniture. Now this furniture earlier it is appearing at 15,000. So we write here 15,000 plus new purchases 7,700. So total furniture is 22,700, and previous year's furniture we write here also. From the adjustments we are taking 15,000 minus depreciation 10%. Flat rate is given, so 10% of this amount we will take 2270 and we subtract it. So 0, 3, 4, 0, 2, 20,430, and this depreciation we take here, 2 depreciation on furniture. It is 2270. Then next item is sports equipment. Again we take it here, sports equipment. In the previous year's balance sheet also this item was appearing. So previous balance of sports equipment is 16,000. New purchase is 12,000. Total 28,000. Previous year's balance of sports equipment we take here, sports equipment 16,000 minus depreciation 10% again 2,800 to be subtract from it. 28 minus 226 to 25,200. This depreciation we take on the expenditure side. 2 depreciation on sports equipment 2,800. Next item is fixed deposit. Fixed deposit we have already written. Then closing balances, and before that, one more item in the opening balance sheet: building. From the adjustment, building is 40,000, and this building we will take here also as it is, and depreciation also to be charged on this building. Building is 40,000 minus depreciation 10%. 4,000, so it is 36,000. This depreciation we take here to depreciation on building 4,000. Now, cash in hand and cash in bank. So right here, cash in hand, it is 690. Cash in bank 22,000. Now see, all the items from here we have taken, from the adjustments, outstanding subscriptions, at the beginning we have taken, at the end we have taken. Then at the end here. Then building taken, furniture taken, sports equipment taken, depreciation done. So this is how we have to prepare it. So we will total all the statements first. Make the total of this balance sheet, so that capital fund is known to us. It is 0, 9, 7, 8, 15, 8, 9, 11, 16, 22, 3, 4, 8. 82,590 rupees, our capital fund. Capital fund, we write here as balancing figure, 82,590. Then take this here, capital fund, 82,590. Now, calculate surplus or deficit. So here in this question, we have 22, 23, 32, something, 16, 20, 22, 24, 20. This side is shorter. So we take the total of this side. 5, 7, 3, 10, 15, 15, 7. 22, 4, 5, 5, 9, 14, 34 to 50 this year, this side, and this total we take here 24 to 50. Let us calculate it roughly. 0, 7, 10, 11, 14, 16, 24, 8, 4, 12, 14, 16, 16 to 18, 18, 4, 20. 18 for 22, sorry, and 32. So 0, 15 minus 7, 18, 8, 11 minus 4, 7. This 17, 18, 80 is our surplus. So we have 2 surplus. That is excess of income over expenditure. Over expenditure. 1780. This is our calculation. From here should be done in the notebook with pencil and rub it. And plus the amount of surplus in the capital fund 1780. Let us see what total comes here. 8, 9, 17, 6, 7, 13, 3, 1, 4, 84, 370. And the total of balance sheet. So here 0, 7, 5, 3, 8 to 10, 5, 3, 8 to 10, 3, 10, 14, 4, 3, 7, 7, 8, 15. It is showing 154, 0, 70. Here this side 0, 9, 3, 12, 5, 17, 7 to 9, 9, 4, 13, 18, 20, 4, 7, 11, 11, 5, 16, 16, 6, 22, 24, 5, 6, 8, 10, 13 to 15. 154, 070. So both the sides of the balance sheet are satisfying the same total. This way we have solved it. Have a glance of it. So we have learned how to solve a question when receipts and payments account and additional information are given, and the demand of the question is to prepare income and expense account and closing balance sheet. And if opening capital fund is not given, then we prepare the opening balance sheet. So keep doing the questions. In the description, you will find a link for practice questions related to such type of questions. In our next class, we will again meet with similar type of questions with some different adjustments or different way of presentation in the question. Till then, have a nice day. Stay safe.